Well, Bitcoin options expired today as Bitcoin desperately attempts to flip $47,000 into ultimate support after the September 7th dumpening. Bitcoin, Ethereum, Cardano, and the rest of the Pumpy Squad are one final test away from initiating Moon Mission 2021. And on-chain metrics show Ethereum repeat an event that led to a 60% pump within a month the last time that it happened. And with uncertainty over regulatory decisions related to DeFi still yet to be determined, did GigaChad Hoskinson prepare Cardano for this a long time ago? Your host, Gregory Gape-A-Lot, and much like Bitcoin, we are about to split the cheeks of the bears once and for all. And with us most likely going into a volatile weekend, will Bitcoin and the rest of the crypto market maintain and enable us to initiate a massive explosion towards the beginning of next week? Or could there be something very dumpy waiting for us? So you guys make sure to like, subscribe, turn on these absolutely time-sensitive alerts. As well, if you're interested in joining our new ADA pool with only a 2% margin, meaning more of the rewards go to the pool and less to the SPO, so the lower the better, you can just watch a quick 2-minute tutorial below. It takes only a few minutes to do. And without any further ado, let's jump in. Unbelievable. So there's actually a lot to be covering on these charts. Ethereum, Bitcoin, Cardano all look absolutely primed, and we're going to be talking about that in a few here. We just have a giant test we need to discuss first, and as well something very, very, very big that we're going to be leading into in just a few minutes as well. But we can start off here with Ethereum. 1.2 billion has been withdrawn from exchanges in just the last day, in the last 24 hours, with over $1 billion burned in ETH since EIP 1559. This sets a new record for short-term churns from exchanges, meaning short-term removals from exchanges. And the last time that we saw this, the price of Ethereum rose 60% in 30 days after 1 billion was withdrawn from centralized trading platforms back about 5 months ago. So now we've seen the highest amount. It used to be 1 billion that we've seen from Ethereum withdrawn from exchanges. Now it's 1.2 billion. And the last time it happened was in April, before Ethereum rose dramatically here. And you can see that here. And obviously you can see Ethereum's chart. That was kind of the precursor to Ethereum hitting its all-time high, right around 4,400 US dollars. And the fact that so many ETH has been burned is something positive as well. But now for Cardano as well, which is equally as bullish here. Obviously smart contracts is no longer a meme. Like, when will smart contracts come out? Because that was kind of a meme for like the past couple of years. However, smart contracts are here. However, the big thing here is DeFi, as obviously Ethereum has been in the news for, the SEC, Gary Gensler, like looking into it, especially, potentially coming after DeFi, stablecoins as well, and just really this whole new use for crypto obviously is probably going to be coming into stricter and more tedious regulation, is most likely the case. So again, we'll have to see. This will be shaping up over the next few months, most likely, but it's something, again, I think a lot of people are preparing for. However, last month, Gary Gensler did make it clear that projects in the DeFi space can expect a crackdown, similar to what was witnessed with ICOs back in 2017. So that's basically just kind of a little warning there. DeFi is not exempt from regulation. And Charles Hoskinson, the creator of Cardano here, is expecting a new wave of DeFi projects focused on identity and decentralized governance to take over from the first generation. So the second generation taking over from the first. And his quote here, "The winners of the future in DeFi are going to have liquidity, interoperability, the ability to move multi-chain, and finally, cost predictability." That's such an important thing. It's so bizarre how we tolerate massive swings in the price of doing business, and clearly referring to gas fees there, which I don't think anybody on the planet at this point disagrees that Ethereum's gas fees are a little bit insane, right? Ethereum would have infinitely less complaints about it if gas fees were not so insanely expensive. And so, yeah, I mean, if that can be tackled where we have a cost predictability with these fees, then obviously that in itself is a very welcome addition to DeFi. And according to Charles here, DeFi on Cardano will be significantly harder to regulate. And he says it's because of a lot of design choices that Cardano made the market is not aware of yet. So I'm very interested. Again, that could be an empty promise, or it could be something very, very overwhelmingly bullish. So again, something I'm very interested to learn more about. Once the projects that are currently in the commercial pipeline come online within a year, there will be millions of users on the blockchain network, Charles said there. So if that truly can be delivered, which there have been more and more things delivered with Cardano this year specifically, then I think that could end up being very, very good. And with that being said, Simon Dedich, the managing partner at Moonrock, also believes ADO is looking actually super bullish this cycle here with a very nice consolidation we're seeing right now. And he's saying that a retest of $3 will occur in no time. Obviously, we see this kind of pennant formation, which we're going to jump into in the charts in just a few minutes here as well. But before we go any further, I think it's absolutely important. We talked about this yesterday, the SPX holding this level here, because if we get a massive stock market dump, then will that be good for crypto? Historically, it would say no. It would say it's bad, and we might see a downturn with crypto. And so potentially, you know, is this being one of the reasons here, China facing a potential Lehman or a Lehman Brothers moment? And basically what this is about, I'm sure many of you have heard about this of just over the last few days here. Actually, this week, 13 years ago this week, Lehman Brothers imploded here, and it sent shockwaves around the world. And of course, I'm referring to the 2008 crash that essentially spawned Bitcoin and spawned cryptocurrency. Bitcoin was created as a response to this 13 years ago this week. And so Evergrande here, a Chinese real estate company, this news came out, I'm sure you've heard, a staggering 300 billion of debt outstanding could set off a chain reaction that spreads overseas. This article makes a point of saying, you know, nothing to worry about, but I think it's something we should consider here. So there is fear that an Evergrande meltdown will have systemic risks on par with the impact Lehman Brothers' demise had on the US stock market. Okay, so like Lehman, Evergrande is massive, and the company has over 200,000 employees, raked in more than 110 billion in sales last year. Just very big, a lot of impact potentially. And you know, there are some people saying, quoted in this article, saying, I don't think it could be a meltdown, that financial problems of Chinese property companies could not reverberate to the US. And then down here at the very end of the article, it does say that one of the things people are optimistic about is that China's authoritarian government has enormous influence over what happens in their economy. So basically, if something were to go wrong, China wouldn't let it go wrong. And so I don't know how much faith we can have in that, but it appears that a default may ignite a financial crisis. Chinese authorities would almost certainly forestall it from happening. I don't know if China can have a Lehman moment because of this, because, you know, those markets are obviously different than US markets, but they end it by saying, or at least we hope so. So it doesn't inspire a lot of confidence for me. Just from reading this, it seems like they're just saying, well, you know, hopefully nothing bad happens. Let's cross our fingers. Curious what you think below. And obviously, if this does impact broader markets, it will inevitably have some impact on crypto. And will it bring crypto down, or could crypto be a hedge? I still think it's a little too early for that, maybe. But with that being said, yeah, this is just a very big moment. We talked about this yesterday, this 50-day, every single month towards the middle of the month for like the past 5 months, we've bounced right here. Let's hope we get a bounce, because if we don't, then, you know, maybe things could shift a little bit in a direction we don't necessarily want them to go. But with that being said, Bitcoin is actually still kind of just testing right on the 21-day moving average still. Not a lot of price action for Bitcoin. If we go to the daily chart, you could see that even on the 6-hour chart, this level right here, where we're testing right now, is the $47,000 level. That is just very obviously important. So when we crashed on September 7th, we went below it. That's where we got rejected when we bounced. There's always a bounce after a crash, and that's where our rejection bounce was. But then just 2 days ago, we actually did get above it all the way up to 48, which is good. And now we're trying to hold this. So we bounced above it. And of course, we're coming back to retest it. And it's very important we hold 47,000. Okay, this is just a huge level we need to hold here. And with the options expiry today, obviously, yeah, the potential for volatility to be held hostage, especially with even weekend price action, we need to be aware of that. But you can see here just our very long level of support we have on here, going back all the way to February. The $47,000 level is just very, very important. So very big for Bitcoin to hold that. And if Bitcoin can hold that, then I think altcoins are about to tear it up. Absolutely. Ethereum still kind of just testing this big level of resistance here. It's now below its 21-day. Yesterday it was above it. But ultimately, Ethereum is in a very good position. It consolidated below 3,400 for quite a long time. So if this successfully does initiate a backtest here and we hold this, then I do think Ethereum is going to be heading up over the next 2 months to that target we talked about yesterday of what I believe will be at least $8,000 US, which is the 1.618 fib extension here too, which is, I mean, it's like about 7,900, but yeah, right about 8,000 up here. And Cardano as well is obviously also forming some sort of consolidation pennant right here. And yeah, is this potentially, okay, we talked about an article 2 days ago, is this potentially very similar to the exact run-up we saw towards the final 2 months of last year and the first month of 2021. So a situation kind of like this, where we have this massive run up, a nice little pop to the upside, consolidation, and then we continue running further here and kind of like a bullish pennant, similar to like what we saw right about here for Cardano. Because honestly, I think that Cardano has much higher price valuations to attain in this bull market. Specifically, we talked about it about 2 or 3 videos ago. I think like $6 is like a minimum target I think that Cardano will hit. Obviously, I said about Ethereum, 8,000 is a good target. And as I've been repeating for months and months, I still think $100,000 Bitcoin is what this bull cycle is shaping up to be. And again, those are actually very low estimates compared to everyone else I've seen. A $6 Cardano, an $8,000 Ethereum, and a $100,000 Bitcoin. That is like a very low estimate for pretty much every other bullish person in the place or in the space. And I do think they could go higher, but I'm just trying to be a little conservative. I think those are kind of like minimum targets. But with that being said, we have to be very cautious here over the next 3 or 4 days to see how the S&P and kind of the global markets react, because again, it's very important that we don't get a massive collapse in the stock market. So if you're using your channel, make sure to like, subscribe, turn this gives me these absolutely time-sensitive alerts. As well, if you want to stake and earn interest with our ADA pool, it takes a few minutes, literally zero risk involved. You're keeping the keys, you're delegating to us. You can literally remove it 2 minutes after you put it in if you want, right? There's no lockup period. I mean, if there was a downside, I would try to mention it right now, but there's genuinely not downside. You're helping a validator to basically secure the network and mint blocks. That's kind of the point of these pools. And our pool only has a 2% margin, which does not mean your rewards. The lower the margin, actually, the better for you. The lower the margin, the less goes to the SPO, and the more rewards go to you. And because it is a brand new pool, we should expect rewards in about a week from now. So if you've already delegated, yeah, we're probably about a week out from the first rewards. But without any further ado, that's it for me. Bye-bye.